chronology, and instead, let's talk about Silvergate. So, just because you said about the lending, mad lending pandemic that we've just had, contagion effects, it's actually now hitting Silvergate, which is, actually, how old is Silvergate? Do you remember? I think they're like, what? They're pretty old. So like,
yeah, I mean, they're not a new bank. They've been around for a while. I think that the newishness of it is they've pivoted into crypto.
Yeah, I think you're right. I mean, they're definitely one of there's Silvergate, Signature, a couple of others, Monty something. I forget the name now. But yeah, there's a few big-ish banks that will seem more willing to do crypto, because we talked about this before. None of the TradFi banks would touch us a while ago.
I mean, because this is actually a good story. When Matt and I founded DeepQ Digital, we quit our jobs, and when you quit a banking job, you have what's called a garden leave, where you're still employed by the bank, but you're kind of just sitting on the sidelines. You're not allowed to have access to your email or Bloomberg or anything like that. It's meant to be a period where your information regarding the market can sort of like decay. And I remember like the week after our garden leave was over, Matt and I got in a car. We went over to JP Morgan. Both Matt and I do some personal banking there. And so we were like, we've got significant assets at JP Morgan. Like we're customers there. We'll just roll in, start a business account, and they'll be super happy to have our business. And the guy looked at us like, "Are you fucking crazy?" No.
He's like, "Crypto? No, that's got a number. That's not what's the business. Crypto? No.
No, we don't do that. We just don't." And he's like, "You can." And to his credit, he was like, listen, you can maybe go to a smaller bank and you can tell them that you're like a technology company, not a crypto company. But the minute you say crypto, most banks won't touch you. And that then began probably a 2-month period where the number one issue that we were facing as a firm was, can we actually find a bank that will take our money? And we're not even talking like we were trying to loan money, or like we were like trying to loan money based off of our crypto deposits. We're literally
just
talking about a business checking account to pay bills. And what we found is that as a U.S. corporation, you really have two options to get a bank account as a crypto firm, and that is Silvergate, and then the second one is reasonably newish, but gaining a lot of momentum, which is Signature. And we opted to go for Signature for two reasons. The first is they do a lot of business outside of crypto. So we felt like from a balance sheet perspective, we were to, park money at Signature. And if crypto were to blow up, they're diversified enough that, we'd be safe. But also they were probably one of the only banks that didn't charge an exorbitant fee just to exist.
Yeah.
I think Silvergate, when we talked to them, was like, cool, we will charge you $500 a month for a checking account, and you need to park $100K minimum at the bank to keep an account live. And it's not that big of a deal, but at the same time, when you're a startup, you're like, why am I going to spend $500 a month for a business checking account, which is free for any other type of business? It's really insane. And we had a couple other people that were not Signature and not Silvergate that were like, yeah, if you park $5 million here and pay us $2,000 a month, we'll let you have a business checking account. It was absolutely insane. I was absolutely floored by the hazard pay that they extracted out of us to try and just have like a simple checking account. So I guess if Silvergate were to go down, one, that would be a massive blow to the industry, because I think that would shut off a vast majority of the what I'd call crypto to fiat on-ramp in the US. And then second, what it does is the Silvergate Exchange Network is a huge portion of liquidity in the market. I don't know, Matt, do you want to go into what the implications of the Silvergate Exchange Network going down would be in
Yeah,
terms
so
of liquidity?
Silvergate have their own effectively blockchain, as Carl said, the Silvergate Exchange Network SEN, and it allows participants to send cash pretty quickly, almost immediately. I mean, it's just effectively Venmo, but
Yeah.
it's for bank to bank transfers, or it can be an exchange, can be part of it. So and the deposits will happen in like, I don't know, 10 seconds or something. So a lot of companies that are trying to fund efficiently on exchange will use that, and then they'll move it back at the end of the day, for instance. So again, you don't leave cash on and have counterparty risk. So I think, but it's actually interesting. So the report they released on Thursday, their Q4, and I don't know if it was their announcement or they just released a note, but it was like their deposits from digital asset customers went down from effectively 12 billion to 4. So they basically lost like 60% of their deposits.
So that's notable. But
I mean, it really was. So they basically had enough wholesale funding to satisfy the outflows, but then they were not left with enough of a buffer. So they then had to sell a bunch of, and they say this clearly in their document, that they had to sell a bunch of debt securities and related derivatives for cash, and which meant they then had a 718 million loss on those. And that's kind of the thing. So they're posting a pretty chunky loss. And their share price has also taken a tumble. So I think like Kathy Woods from that ARK fund, they're basically holding now 1%. They reduced almost their entire holding of it, and the stock price has been annihilated the last couple of days. I think like 40-50% or something.
So, but to be clear, from a liquidity perspective, if you think like, what does this actually mean? I think the main issue that you come across right now is like, what's the purpose of the SEN? Right? The SEN allows market makers to, let's say you find an arbitrage between Coinbase and Kraken, right? Prior to Silvergate, in order to close out that arbitrage, you had to trade the Bitcoin on both exchanges, and then you had to wire the money back and forth between your bank account and Kraken, and then your bank account and Coinbase. And that process in and of itself could take, hours to days, and also be very laden with fees. So Silvergate basically came in and said, all right, we actually bank you, the fund, we bank Coinbase, and we also bank Kraken. So we know what you all have in accounts. What we'll do is we'll just treat that as an internal debit or credit, and we'll move that money instantaneously. And so now as a crypto firm who's trying to, arbitrage, Kraken and Gemini, that price discovery mechanism to make sure that the price is equal across both of them is now an instantaneous thing. And the cost and the time that it takes to move that means that without a whole lot of capital, you can actually do that arbitrage and you can close it. So if you remove Silvergate, which probably banks, I'm going to go out on a limb and say, 75% of the US-based crypto funds, you remove actually a good portion of the market's ability to efficiently transfer capital across exchanges and close out arbitrages. So my guess is that the more fear there is on Silvergate, the more you're going to see dislocations in prices across different venues, because market makers are going to be like, oh shit, I could make, 0.5% closing out this arbitrage, but if I do, and then Silvergate goes down in the process, I lose 100% of my money. That risk asymmetry doesn't make sense to me, so I'm just going to sit on the sidelines. And so now you have these massive arbitrages and price dislocations across venues that are allowed to exist for, a good long period of time. I think you're going to see a significant decrease in the amount of liquidity in the market simply because they serve such a vital portion of the infrastructure of the market. And it's going to make it really, really, really difficult for people to be able to move money efficiently across venues and exchanges.
Yeah, I mean, they're not out of the game yet, though, just to caveat.
Oh, yeah, I'm not trying to spread fear on this. I'm just saying, like, if it does happen, this is actually a pretty monumental story.
Yeah, for sure. It'll be like it's the true contagion of that whole debt services in crypto spreading now to a traditional banking run, effectively. It's like a new form
it does
of banking,
highlight
right?
sort of like
we've never had a crypto.
The gap in that crypto fiat on ramp that basically two banks, Signature and Silvergate, own the entire market. And if those two banks go under, then
no, that's the story. If that
how does money flow into the crypto ecosystem right now?
Yeah, I mean, it just calls for more interesting use cases in DeFi as well. I think just so there's not that reliance, but
for sure. But I mean, like even if you're doing DeFi, in order to move cash in size into crypto, you still need to move actual physical cash into.
You need an on ramp. Yes, true.
Yeah. So.
Yep.